Assalamualaikum everyone. Welcome back to my channel, TNA Traders Newbie Indonesia. Starting Forex trading can be an exciting but complex journey. Here's a step-by-step guide for beginners. 1. Learn the basics. Understand what Forex is. Forex, foreign exchange, is the trading of currencies in pairs, e.g. euro to US dollar, pound sterling to US dollar. Get familiar with key terms. Pips, spreads, leverage, lot sizes, and margin are all essential concepts. Know the market hours. Forex operates 24 hours a day, divided into 4 major trading sessions: Sydney, Tokyo, London, and New York. 2. Choose a reliable Forex broker. Regulation. Select a regulated broker in your country or a trusted financial jurisdiction, e.g. US, UK, Australia, EU. Trading fees and spreads. Check for competitive spreads and low fees. This affects your profitability. Account types. Some brokers offer demo accounts for beginners, which is essential for practice. Leverage. Many brokers offer high leverage in Forex, but as a beginner, use lower leverage to control risk. 3. Open a demo account. Practice without risk. Most brokers offer demo accounts with virtual funds. Test strategies. Try different strategies to understand what works best for you. Get familiar with the platform. Practice on the broker's trading platform, learning how to enter and exit trades, set stop loss and take profit levels, and manage orders. 4. Develop a trading strategy. Set clear goals. Define whether you want to be a day trader, swing trader, or long-term trader. Choose a strategy. Beginners can start with simple strategies like trend following or breakout trading. Risk management. Always plan how much you're willing to lose per trade, e.g. 1 to 2% of your capital. 5. Understand risk management. Use stop-loss orders. Stop-loss orders limit potential losses by automatically closing a trade when the price hits a set level. Risk-to-reward ratio. Aim for a ratio of at least 1:2, meaning you're aiming for a gain that's double your potential loss. Position sizing. Only risk a small portion of your account on each trade, usually no more than 1 to 2%. 6. Start trading on a live account. Small investments. Start small. Use a micro or mini account to begin with small amounts of capital. Control leverage. While high leverage can lead to larger profits, it also increases risk. Start with lower leverage and increase it gradually as you gain experience. Track and review trades. Keep a trading journal to record all trades, including entry-exit points, strategy used, and the outcome. 7. Focus on continuous learning. Technical analysis. Learn to read charts and identify patterns, trends, and indicators. Fundamental analysis. Understand the economic indicators and news events that affect currency prices, e.g., interest rates, inflation, and geopolitical events. Stay updated. Use Forex news websites, economic calendars, and analyst insights to stay informed. 8. Stay patient and disciplined. Avoid emotional trading. Don't chase losses or make impulsive trades. Stick to your plan. Follow your trading strategy and adjust only after thorough review and backtesting. Be prepared for losses. Losses are part of trading. Aim for consistency rather than fast profits. 9. Seek mentorship or join a trading community. Get advice from experienced traders. Learning from others can help you avoid common pitfalls. Participate in forums or social media. Trading communities can offer support, resources, and learning opportunities.
10. Refine and adjust your strategy as you gain experience. Evaluate performance. Regularly review your trading journal to identify strengths and weaknesses. Adapt to changing market conditions. Forex markets can change. Refining your strategy over time is essential.
Summary: starting Forex trading involves learning the basics, practicing on a demo account, building a strategy, and then cautiously trading with real money. By following these steps and consistently improving, you can build a solid foundation as a Forex trader.